Now for a very interesting market guest. Comes to us about a month. In between goes to his farms twice or thrice, does kheti badi and all of that. Let's get in Porinju Veliyath, MD and Portfolio Manager, Equity Intelligence from Kochi. Porinju, really good having you as always. Thanks so much for taking the time out. You know, I was referring to our earlier interactions, Porinju, as well, the last 2 or 3 times that you've been here. You have been bullish on this market. Just that yesterday's mail speaks about a different phenomenon now, that the markets are at 8,800, 8,900. You talk about maybe replacement cost theory coming back into flavor, a couple of other things that will now the market will start looking at. I'm guessing you're generally bullish with new flavors to identify in the market scenario right now.
Yes. Neeraj?
Yes, Porinju.
You can hear me. Okay. Neeraj, it's true that I have been very bullish, not only this, in the recent past, last 2, 3, 4 years, I used to always wonder, how can the ownership of these companies be traded at such low valuations when, the kind of private equity valuations and, acquisitions used to happen at 5 times, 10 times of that kind of valuations. And I think now it is, coming to reasonable levels of valuations in the market. See, at around 16, 17 price earning multiples, I believe markets are in general reasonably priced. But this reasonable pricing, does leave a lot of scope for stock picking. And another very important aspect, see, somebody was jokingly telling, now markets are trading at Modi PE, but on a UPA earnings. I'm not telling bad about UPA, the period, that era of last maybe 5-6 years, very challenging times. So maybe the real valuation or the valuation can come to real rich levels only when the Modi PE is applied on the Modi earnings. That's a very important, there is something in that statement. And whatever said and done, see, India is rocking in a challenging international global environment. That's also very important. But everybody understands this and everybody, advocate that bullish theory. But at higher levels, people are very cautious, which is definitely very good and healthy for the markets. So we are in that kind of a favorable, still investable market environment today. There is no doubt about it.
Porinju, I just find solace in your tweet from yesterday. Markets flat, but most of your stocks are not. Force is up 15%, RPG Life up 20%, DLF, Anantraj, Answers, all in action. And kudos to you because you were the first one to venture out, stick your neck out and say that real estate is the place to be in. But at times of volatility, do you get the fear that perhaps this trading rally could fade out when it comes to real estate? Or is that a conviction idea to stay put with realty names, because of the thesis, if housing finance companies are doing well, realty too is bound to pick up?
Aisha, it's not just a trading structure of the market. These stocks have got a value. See, companies can have some kind of, management issues and industry challenging times. But for every company, there is a price, which reflects in the stock price. And there is a tendency, which is a very unhealthy trend happening in the stock market last many months. Everybody is chasing the same set of companies, which are considered to be good. Excellent management and great balance sheets, beautiful business model. And see, they all are trading at 60, 70 kind of price earning multiples. And I don't think that is where the money can be made from here. You have to look at companies. India has a lot of them in the mid cap and small cap, very large number of companies. We are second in the number of listed companies in the world. So our economy structure, I have told earlier, the structure of Indian economy, it leaves scope for a lot of these smaller companies to play an important role in building up the economy. So that's where investors can still bet on. Something like mid-cap companies or small cap or real estate, there are people bring in a lot of reasons not to buy them. But for every company, every business, there is a price. And please understand, a lot of these companies in small cap, they are aspiring mid caps. And many of these mid caps are they are thinking of moving into the large caps. So that is where the maximum money can be made, where you can make serious money, and perhaps fast money. This can happen because of the turnaround in the management style. I have talked about it earlier. Sometimes it can happen because of the turnaround in the industry environment, in the balance sheet quality. There can be various aspects which can convert these penny-sized stocks, but some of them are very great businesses. I was just talking about one company for holding in my portfolio management, Shreyas Shipping and Logistics. Just 1 year ago, it was at 40 crores market cap. It was a penny stock, nobody wanted to touch. Nothing changed. Shipping was a bad word. Today at 800 crores, the stock has gone up by 20 times within less than 1 year. Now, there are a lot of talk about this. Analysts in Mumbai are meeting the management. Management is see, nothing has changed fundamentally for this company. They own 60% of the coastal shipping in India, containerized. A very important futuristic business. Nobody was willing to listen to me when I was talking about this company a year ago, 2 years ago. So there are such kind of hidden gems in the market. That is where the maximum money can be made by investors. And see, today, individual investors are given a huge opportunities in the market. I'll tell you one very simple thing in the market. See, for a mutual fund or a large investor or an FIA to buy a company, a stock, they need to have certain size of, market cap. Sorry.
Yeah, that's true. That's true. The mutual funds have to have a size. I don't think individual investors need to have that size. So, Porinju, the question that comes to mind is that where is it that retail investors can find such gems right now? Is there an industry which is turning around where there is value, and if people buy, they can make multiple times the returns over the course of the next 2, 3, 4 years?
Yes, there are a lot of stocks. I strongly believe so. But you cannot buy a stock which is discussed widely in the TV or, chased by the big operators or the very so-called fancied big investors in this country. Nowadays, people are searching for the names, some fancied names as value investors, and they are buying only those few stocks. Maybe the stocks are overpriced. Please, try to find a hidden gem. That opportunity is always there, nothing new. It was always there. But what I am telling you today also, it exists in a wide manner. A lot of stocks. I can feel, hundreds of smaller Indian companies which can give you 2 times, 3 times, and maybe 5 times kind of return in the next 1, 2, 3 years. That space is there. And it's very easy to find them. I'm telling you, the only thing, now today, there are how many companies are trading at single-digit PE. And I find it interesting, many of them are growing at 25-30% for the last 5 years. And still there is a visibility of growth. But people don't like to buy it. People buy it and chase it, once it goes by 5 times, some big operators or investor name come in the shareholding above 1%. That's a very funny part. And I think that is not the way to make money. There are a lot of companies outside the already well-known, over-researched companies in India.
Porinju, I just want to get back to the real estate sector, considering that's your big thematic call that you made. DLF, Anantraj, Ansals. Do you continue to be bullish on these 3 names, or are there new additions that you've made to your portfolio?
In fact, when I talked about DLF, I think a couple of months back at 110, near 100 levels, that was the first time we bought DLF in our portfolio management. We never bought this stock earlier. And that was the time maximum people want to sell and get out of this company. Why? See, people are not really looking at the real fact and fundamentals of the company. They go by market reports, media reports, and they just take some sudden decisions which can be wrong. Similarly, that is why they bought the stock at 1,000 rupees and more. And see, I'm not really recommending a DLF, Anandraj or Ansals. And I was just telling in a series, there are a lot of companies in India, maybe some 30, 40 companies, which are not considered to be not blue chip real estate companies like, Godrej or kind of companies. So these companies also, they have got a lot of value. See, people think about management quality in the mid cap and small caps. I'm telling you, it's a very wrong concept. This management quality is applicable to every kind of companies. It is definitely a challenge in India. There is no doubt. I know the other day someone was telling me, a lot of thousands of investors in India, they wish for the, the death of the promoter. This is something we should really discuss. But that is the way many companies in India are managed. They absolutely, ignore the interest of the minority shareholders, and they make money only for the family. So that kind of a structure in our Indian smaller companies is definitely it was there. But please remember one thing: it is coming down. It is declining. There is a trend emerging that many of the small and mid-cap companies, the new generation is taking charge. They are educated. They are foreign educated, some of them, and they want to do a professional way. They understand what is the meaning of a listed company, publicly held. So the management structure, style and culture can change significantly. This is what I told last time, the management turnarounds can create multi-baggers.
Okay, so Porinju, we are running slightly out of time. I don't know how much does compliance allow you, but if you can you identify a few pockets out here? If you can, that is, which investors can look at afresh?
Yeah, I can just tell a couple of examples where the stocks are in single digits. It's not in fancy. Some institutions are selling off. One stock I was looking at, was Canoria Chemicals. The stock is now trading at around 37, 38. It's a company with around 600 crores revenue. The market cap is 150, 60 crores. They have got cash equivalent of 200 crores. And the net worth is around 550 crores. People, maybe the management is not dynamically managing, creating wealth. They are not communicating maybe the best way possible to the investors. There could be such kind of small negatives. But this may not remain always like that. At around 160 crores market cap, I feel Canoria Chemicals can be a multi-bagger in the market. Please don't go give too much importance and buy out the stock because I told on the TV. There are many of them. See, another stock I was watching, Camphor and Allied. This is a very important business. They have recently made a tie-up, a strong tie-up with one of the biggest international company called International Flavors and Fragrances. It's a very big company, European based. Now this company is also available at around 140, 150 crores. I think 300 crores is 300 rupees is the stock price approximately. No need of rushing to buy the stock today. This will be available. Even if it goes up, it will come down. So buy this kind of, there are hundreds of such stories. The stocks are traded like penny stocks, but the company is not really penny. Some of them are growing a decent growth rate for last 5 years, and they will continue to grow for next 5 years. So identifying such kind of opportunity, that is where the individual investors should focus on. You can make a lot of money in the market and a lot of that.
Okay. Porinju, your point is well taken. These are not essentially just pure recommendations from Porinju. People need to do their research on their own before they get into the stocks. But Porinju Veliyath, Porinju, one quick point. We have 30 seconds.
See, equity is risky. This is something everybody talks about, but yes. I do not agree with this. But this wrong campaign that equity is risky, that makes the people shy away from the stock market. Only a very few people make huge money in the stock investing, and they are telling on the rooftop, equity is risky, don't come, so that we can make all the money. I think India should do something about this. I don't think equity is risky. I haven't seen equity as risky in my last 25 years of profession.